Welcome back, and joining us on the show now is Jonathan Barratt, he's CIO of Probis Securities. Jonathan, hi, good to have you. And what a difficult start to a week where we have seen prices jump up by near 5%. And this is after 8% decline in the previous week. So this is volatility at its best.
Manisha, absolutely. And I guess when you look at it, you look at the price action, and whether or not we're going to see crude oil in particular sort of trade back through that US $90 a barrel. It just seems so close, and with the concerns that are out there, obviously, with what's happening between Israel and Palestine, we've got to see whether or not this is going to continue, or hopefully they'll find a resolution very quickly.
The initial statements from Israel do suggest that it is going to be a long and a difficult war. Would you say that premium is already in prices? And what are markets getting? What is it that you would want to watch from here on?
Look, I think although they've said that, I don't think they really mean it. It's sort of when you look at when you look at what's happened, it's you put in your best foot forward, I guess, in trying to weaken the other partner so you can actually resolve it a lot quicker. And I think at the end of the day, that's what everyone wants. They want a sort of a resolution quickly. I think one of the major concerns with having elevated prices for oil, we've already got a supply constraint issues, and we've got that tightness in supply. Now, that could easily just continue to be there. And if we continue to see it, then we've got those other ramifications, those other macro ramifications that can filter through the economy. And of course, that means energy inflation. Energy inflation means monetary policy continuing to tighten. And with that, we've got all the other side effects. So I really think that they've sort of said they want it'll be a long, but if they can get it shorter, it means it's a lot better and a lot safer for a lot of the economies.
Jonathan, when we saw the Russia-Ukraine conflict begin, we did see the prices go to $120, and then we've seen $70 in this year as well, and the war somehow continues there. With the kind of premium that we see building up in prices, with supplies all right, demand not so great, would you say it's quite a bit of a mess, if I can call that, when it comes to fundamentals for crude?
Oh, look, I think it is. When you do look at it, I think the important thing at this stage is the US is obviously the world's largest producer of oil. So that sort of softens it quite a bit. If you remember back in 1973, or hopefully you won't remember back in 1973, but with the Yom Kippur War, we saw a 70% increase in the price of oil. And we also had that oil embargo. That was the first oil crisis. But now you see, with the US being such a major producer of the commodity, or the largest, then that certainly softens it. But regardless of that, we have had that tightness for some time. And whilst that tightness is there, prices will gravitate. I do think prices could probably get up to that US $100. As to whether it goes along that, I don't think so, because I think the market is adequately supplied at the moment.
So what's your sense on what are we headed for in sense of prices for this month, for the rest of 2023, and how long, and what are the cues that you would be watching out from when it comes to Israel and Palestine?
Yeah, prior to Israel and Palestine, I was looking for prices to be lower. It sort of made sense in terms of when you look at the tightening and economic slowdown, you actually sent that, okay, 85 is pretty toppy. And that's what we mentioned the last couple of weeks ago, where we said, look, we don't think prices should be up around this level. It doesn't make sense given where the economies are going. I do hold out that if Israel and Palestine, if more of the Arab nations get behind it, as did the US very quickly support Israel, well, then I think you've got a different dynamic starting to play. And that different dynamic is something that I'm really concerned about. If that does start to form, and other Middle Eastern producers start to hold back in terms of supply, then I think you will breach that US 100. But if they don't, and then we can see some form of resolution, I think you'll see prices come under pressure quite quickly. But at the moment, there's still a lot to happen. I do think the market wants to take it to US 100, and let's see after that.
Oh, well, yes, and somehow we've seen an event come by as well, which seems to be supporting those kind of price moves. Jonathan, also, how would you look at the gas prices? That continues to run up. We've seen heating oil prices see support as well. So not just crude, but the crude products also seem to be running up.
Absolutely. Look, I think when you look at the crude product, when you look at natural gas, the same thing. Remember, we've got a couple of months outside of the Northern Hemisphere winter. Natural gas is switching over from cooling now to heating. Cooling to heating. I get a sense that with the volatility in the weather, the market's saying, well, have we got enough supply? Normally there always is enough supply, but I just think it's sort of saying, well, Russia's still holding a lot of that supply, or holding the market a little bit to ransom on that. I do think natural gas prices are exceptionally low. They have been for some time. I don't think it justifies that. The fundamentals don't justify the price, and I think that's why we're seeing this dramatic lift. And I would probably expect that to continue. The other thing to note with oil and also natural gas is that the climate is a big theme at the moment. Anything could happen with oil. Just imagine if we got a hurricane through the Gulf of Mexico. That certainly keep prices. But obviously, if we get a very cold winter, the market will say natural gas should be a lot higher from here.
Okay, well, hoping for the best there, Jonathan, as well as Manisha. Thanks very much for taking us through that conversation. Remember that one of the biggest